Hello friends, in today's video, we will be discussing about AFFIRM Holdings, ticker symbol AFRM, which is a fast-growing financial technology company that enables consumers to buy goods online and pay later. Basically, AFFIRM provides the option for users to take up a microloan instead of paying in full when they pay for their purchases from their favorite merchants. Some of AFFIRM's partners include Shopify, Walmart, Target, Peloton, and more recently the big-ticket partnership they announced with Amazon. The company was founded in 2012 by Max Levchin, who was also the co-founder of PayPal. I am very bullish about the long-term prospects of this company, and before I share my thoughts on my investment strategy, let's review some of the key financial and business metrics from the investor presentation. As you can see here, AFFIRM's revenue has grown 71% year over year in the fourth quarter of this financial year, which is the period April to June 2021. Additionally, gross merchandise value, which is basically the total value of purchases facilitated by AFFIRM, was around $2.5 billion, amounting to a year-over-year increase of 106%. Their active customer base also increased at an impressive rate of 97% year-over-year. It is also noteworthy to mention that their active merchant base has increased a massive 412% in the same period of time. The company also expects to continue growing revenues at a promising rate of 30 to 40% for many more years to come, and I feel this is pretty reasonable given that they are still very early in their growth stage. Now let's also look at the other side of the coin about some of the potential risks. The main risk I want to point out here is the merchant concentration risk in terms of their overall revenue. As of now, their top merchant partner is Peloton, which contributes around 20% of the total revenue, and also the top 10 merchants represent around 25% of their revenues. So it will be very important for AFFIRM to improve on these metrics by adding more strategic partnerships and spreading out this risk. Another risk is the obvious one, which is their current valuation, which stands around $40 billion. This is around 27 times their projected revenues for fiscal year 2023. This is a very rich valuation, so we should definitely be ready for stock price volatility in the short to medium term, depending on the overall market conditions and the kind of news that comes out from the company. Having said this, AFFIRM has a great management team in place, so over the long term, I feel the growth would justify the current valuation, so it is never a bad time to start buying the stock, especially if there are price pullbacks in the short term. Now, to understand what is a good price to start buying AFFIRM, let's first look at their price chart. As you can see here, the stock has jumped over 230% since May 2021, mainly driven by the announcements about the partnerships with Target and Amazon. So I do feel that there could be some pullbacks in the short term. I think a good entry price would be around the 110-120 range, which is also close to the 50-day moving average. So there are a couple of things we can do here. We could slowly average into the stock by buying in increments of say $1,000 each. For example, we could buy 6 shares at the current price of $160, add another 7 shares around $135 and so on, thereby eventually owning 32 shares at an average price of $125. Another thing we could do is to decide our desired entry price and sell put options around that price to earn some premium while we wait for the stock to drop to that price range. So for example, we could sell the $120 put option expiring on November 26th and collect a premium of around $160. This would give us an annualized return of 15% and a chance to buy the stock 25% below the current price of $160, which is certainly not bad. Or if you're super bullish on the stock, you could obviously buy a full position at the current price. Personally, I would go with a blended approach of buying around 25% of my position at the current price and also selling the 120 put option in addition. Overall, I also want to say that since this is a growth stock, I don't plan to invest more than 5% of my total portfolio value into the stock. That's all I have for today, and I hope you liked this video and got some value from it. I would really appreciate if you could please leave a like below and subscribe to my channel. And let me know in the comment section if you have any questions, and I would be happy to answer them. And as a friendly disclaimer, please note that I am not a licensed investment advisor, and my videos are only meant to document my views on various investment related topics that I am interested in. Have a great day, and I'll see you in the next video.